Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap and a look at the latest session on Wall Street, which finished in the red. So we've got a Dow Jones Industrial Average staging a major comeback, recovering from steep losses from earlier in the session after President Donald Trump said tariffs against Mexico would be paused for 1 month. And then after the market closed, we heard from Canada that those tariffs against the country would also be paused for 1 month. So that's starting to see market reactions across in the after-hours session. And you've got the S&P 500 sliding 0.8% to 5,995. The NASDAQ Composite 1.2% lower. And the Dow 123 points down or 0.3% lower after closing or after dropping as much as 1.5% earlier in the session. For more insights, we are joined by David Dietze. He is the president of the Dietze Wealth Management Group. David, how are you doing today? Thanks for joining us.
Ryan, it's a pleasure to be talking with you.
Always great to have you on the show, and we have a lot to unpack here, starting with those tariffs. What do you make with the latest moves so far from a market reaction?
Well, it's been a roller coaster, and of course, the market was way down over the weekend, and as we came into today, because of the planned imposition of 25% tariffs on Canada and Mexico and 10% on China, and nearly all economists agree that's going to hurt economic growth. That's going to drive up inflation, and it's not going to just be in this country, but it's going to really be very hard on Mexico and Canada. And of course, we've all been thinking that of all the Trump 2.0 agenda items, the tariffs was the least popular. And most people felt that it was just kind of a negotiating ploy. It really wasn't going to happen. And then, of course, we got the news it was going to happen. And, of course, the markets have reversed during the day as a deal was reached with Mexico to defer the implementation of those tariffs for a month. And then, of course, after the market closed, Canada's reached a deal that would defer tariffs for at least a month, and now I'm looking here at S&P futures. They're higher right now than they were when the market closed on Fridays. So we've regained and a little bit more all of the losses that was suffered by the market during the normal trading day.
Yeah, so Mexico and Canada, we've got a pause button on that front. Do you see anything similar playing out for China?
That's a good question. Of course, they are in their lunar holidays, which may delay a little bit their response. Of course, 10% is not as bad as 25%. Certainly, I think China has too much pride just to get on the phone and talk with Trump for an hour and make big changes in their policies and so forth. So I think it's going to be more complicated. Nevertheless, and of course, the other thing is the American people are essentially friends and allies with Mexico and Canada, so there's far less public support for punishing those two countries. I think there's a lot more skepticism on China, so it may be a more complicated situation to negotiate.
Yeah, we are going to be tracking the latest on this front as the tariffs are due to be implemented in the next few hours. All right, looking at what we have also on the table, you have the potential for earnings to have a hit as well. How much will the stock market play a part in Trump's decision-making, you think?
It's a great question. What will President Trump listen to? He's not going to be listening to the Democrats. He's not listening to a majority of economists. But I tell you what he will listen to is the stock market. Who knows whether today's initial sell-off unnerved him just a little bit, but of all the presidents we've ever had, Mr. Trump is far more likely to measure his performance by how that stock market is. So the stock market vigilantes will be voting. And, of course, if there's a significant sell-off, and it's be a lot more than we saw today, I do think that Mr. Trump could rethink because that would be a real indicator as to where that economy is going and could be the first sign of a crack in the economy way before potential inflation hits the pocketbooks of American families. So that's something that, one reason to be long-term bullish insofar as in the long term, I think Mr. Trump wants stocks to do just as well as investors want them to do.
All right, talking about bullish in the markets, where are you looking to when it comes to opportunities and how this earnings season is playing out?
Yeah, so we are still basically looking to fade just a little bit the Mag 7. We're starting to see some statistics that show that they've kind of going sideways here since really last summer when NVIDIA first disappointed. And, of course, a combination of sky-high valuations and disappointment by NVIDIA has taken some of the luster off the Mag 7. Of course, now with last week's announcement on the availability of cheap AI chips, is really turning the whole tech sector kind of upside down here, causing people to rethink the valuation of NVIDIA and some of these semiconductor names. But, of course, it could give a tailwind to companies that can use AI because the availability is cheaper. So we're kind of neutral on tech. We are looking at healthcare here, Ryan, because healthcare has a better than market average earnings growth profile, but because they've been lagging here for the last couple of years, their valuations are less in the market. They've wanted to kind of stay under the radar here. Everyone's watching healthcare costs very carefully here, but if in fact we get some softness in the economy due to these tariff concerns or other aspects of the Trump agenda, people may gravitate also to the healthcare stocks because they're less exposed to the economy, they're less exposed to fluctuations in interest rates. You're going to have to go see your doctor no matter whether there's a bear market or a bull market, and so their earnings could hold up better in a volatile situation.
All right, let's dive into a couple of your stock picks here, and I'm looking at Exxon as an interesting, I suppose, topic to talk about because you've got oil prices under pressure in recent weeks. Looking at the month in terms of prices, it's down 1.7%. You've got Donald Trump saying he needs more supply in the market to bring down prices. How will this play out for oil majors?
Yeah, so, it's really there's crosswinds here. On the one hand, few presidents are viewed as aligned with the fossil fuel industry as Mr. Trump. He has promised to remove regulations, allow for more drilling, has reversed a lot of the restrictions that were put in place for the environment that was done by the predecessor, Biden. So that you would think would be very positive for energy. On the other hand, if there is more drilling activity, there's going to be more supply. More supply means prices can fade a little bit. So it's really hard to figure out. Of course, they're also sensitive to the economy. That's why we go back to Exxon, because of Exxon's geographic reach, because it's integrated from and have operations, of course, upstream, midstream. If you broke out the chemical operations on Exxon, it'd be the largest chemical company in the world. And, of course, the downstream operations. The stock is now about 15% off of its recent high, offers a dividend close to 4%. So if there's any volatility or weakness in the energy patch, that just works to the advantages of the big guys. And Exxon, as far as I'm concerned, is the biggest and best well managed. Of course, while you're waiting for some action, you're getting a very healthy dividend.
Yeah, and talking about what else is something to watch out for, we've got Valentines Day around the corner, and one of the big brands that would possibly benefit is Hershey's, which is one of your stock picks. What are the other fundamentals you're looking at here?
Again, no matter what the economy is doing or the market's doing, we love our chocolate and so forth. But again, because of the uncertainty in consumer staples, because of volatile commodity prices, because of all the attention that's been focused on, technology and AI, Hershey's has been kind of left for dead here. But what I like about it is the market leader in candy in the U.S., 35% market share. Now, this was a stock, Ryan, that was less than 2 years ago at $265 a share, but because of inflation, because of higher commodity prices, particularly in the cocoa area, profitability has been hurt. It has slid now to about $151. Just in December, it got up to $208 because Mondelez, the big global confectionery company, was rumored to be making a bid. And so we think that right now the stock has lots of value. We think that the cocoa prices will come down. Commodity prices are nothing if not cyclical. And, of course, if management doesn't get that stock price up, we think bidders are going to reemerge for a company like Hershey's, which is down, close to half of what it was less than 2 years ago.
Right. Another one that's interesting is Constellation Brands, and this is in the snack and, I suppose, beer market play. What's the situation here? Because I imagine a lot of U.S. folks are starting to be more health conscious.
Well, yeah, there's no question about it. All alcoholic beverages are under pressure. We just completed so-called dry January. Now they're talking about putting cancer warnings on alcohol servings. But this one particularly is being nailed here because they are the key importer of our popular Mexican beers, including Corona and Modelo. So I'm going right into the teeth of the fears of the tariffs. And, of course, as we saw today, Mr. Trump blinked, and we've got one more month here. But I think ultimately the tariff concerns will ultimately dissipate. You've got Constellation Brands, market share leader, now selling for well less than the market multiple, but growing faster than the market, and the stock is down nearly 30% the last year. So my thinking here is that if the market for alcoholic beverages stays tough, the market leader wins and takes market share from the little guys. If in fact we get some relief from the tariffs in Mexico, the stock will shoot up. And I note that Constellation is up big in the after hours here in the New York market because of the relaxation of the Mexican tariffs and of course the news on the Canadian tariffs being abated for at least a month.
All right, interesting plays, Constellation, Exxon and Hershey. Lots to watch out for in the coming days, and we've been in conversation with David Dietze. He's the president of the Dietze Wealth Management Group. David, thanks for your time as always, and thank you for your insights.
Thank you so much, Ryan.
All right, catch up with you again soon, David. Stay in Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.